Hi, everybody. I hope y'all had a wonderful week last week. I wanted to visit with you a little bit about the non farm payroll. Released Friday is right here, and I have regular trading hours on. If I show you the electronic, you can see there was quite a bit of trading that happened between 7:30 and the open, or at 8:30 rather, and the open at 9. These are New York times. So 8:30 numbers released. We go straight up, come to a level which I expected it to go this blue line. It didn't ever make it. If I go to an hourly, it it still. I mean, this is not atypical of non-farm payroll. We have these highs up here that just never quite got hit. I mean, you could even say we were going to go to those. I was just doing the low-hanging fruit, and it just never made it. And that's pretty common for NFP. We go up and up and up, and it just doesn't ever pan out. It doesn't ever quite take the highs. It doesn't ever quite take the lows. If you look at the lows, it'll go down to them, and then it won't quite make it. Like say starting here, we wicked down for some reason there, and then we came back down. We didn't quite get there. Didn't quite get there. Didn't quite get there. And that's pretty normal for non-farm payroll leading up to it, and lots of chop. This is on a 1 hour chart, so you can imagine that's a lot of just straight up and straight back down kind of movement. So we move back to the 1 hour, 1 minute, and I'm going to go to the regular trading hours, and I'll show you the gap fill rules here. So here is where we close business on Thursday. That was settlement. And this is where we opened after the number on Friday. So all of this area here that's in black, if you're looking at it like this, the very first candle tick, all of this has not been traded in during regular business hours of the New York session. So that's called a gap. And gap fill rules is this will fill at least halfway in the first 30 minutes. It will fill 70% of the time you're going to see it fill. So my hypothesis was that it would take out this recent swing high from the daily chart and then fill at least half of the gap. The other side of the coin would have been fill half of the gap and then go take out the high. And neither of those happened. I was really wanting that to get taken because that would have been probably a complete gap fill in my mind, but it needed to go first. So we started coming down, and I still wasn't quite convinced that we'd gone right here, just, I don't know, 10% into the gap. I still wasn't quite convinced that we were going south all the way. Once we took out these lows right here with a fair value gap, and we went up and tested it with these two, I don't think I got in even there. I still wasn't convinced. I think I ended up getting in somewhere around this area, or no, maybe around this area is where I finally said, okay, I'll take it. And I just went for a gap fill. No, it was definitely up here. It was during this one right here. I went for a gap fill for the halfway point because I still wasn't convinced we were going to fill the whole thing. But so I ended up getting filled right there. This is the close, red candle close. Open will be there, top. So our 50% mark is right here. That's where I had my take profit. And that candle whipped it out. Then you see we kind of stuttered around there. I just went ahead and got my money and then left the party because I didn't want it to go. I've been having a habit of making this nice $300, $400, $500 on a rundown like that, and then trying to get back in for more profit, and then eating my 500 will go down from 500 to 400 to 300, and so I'm just leaving it alone right now just to maintain my profit. But you can see there was another opportunity to get in right here at the base of this fair value gap for a push to complete gap fill. It didn't ever completely fill it, and that's not atypical. It will usually leave a little bit of the portion open if it has intentions of going back up. And also it's non-farm payroll, so it's heavily manipulated. And like you could get in here with the expectation that we're going, like right here, there's a fair value gap respected. We took out that high. That would be a decent trade right there. It's not a lot of points, but it's some. That's from 57 to 118 or 120. So, you could get 60, 70 points on one micro. That's over $100. And then it comes back down and it doesn't quite take out the low, indicating that we're going up from there. But are we? It goes up and it comes back down. You could have theoretically bought here with the intention of it. I would be expecting it to go take that blue line at that point, but it just never does. It just goes up and down for the rest of the afternoon. It does try to reach for these, and I believe it made a new high of the day right at close. So theoretically, you could have gotten in here and held through all this garbage, but I would have to take a trade like that and walk away because there's no way I could sit through all that. But that's typical non-farm payroll day, and the gap fill rules did apply. We went up, we came back down, we filled the gap to the 50% mark. That's money. That's the 70%. Once we go past it, there is a 80% chance that we're going to fill the whole thing, and we didn't quite fill it. I would say there's an 80% chance we're going to fill it to 90% because I've seen it do that where it goes and it doesn't quite fill it all the way. It leaves just a little portion open at the bottom if we're bullish. And that's what it did today. Just left a little portion open at the bottom. And that's your gap fill rules. Anytime you see one of those, put you a fib on it. Here's another gap right here. You can see it right there. It will fill 50%. 70% of the time, it will fill half of that gap in the first 30 minutes. Now, this one, you didn't have a lot of opportunity. It went down, it went straight back up, and it kind of just ran real fast up to the halfway point. Had you not, if you were lucky and you got in right when it opened, then you could capitalize on that. But it's pretty tricky trading when it opens because it a lot of times will just gyrate around a while and you get smoked. But it did fill the entire gap. And so that's a really nice gap fill situation there. Let's go back to the next one. There's one here. We took out a recent swing low, and then we went back up. And that's still not, there's the 10 o'clock. So we still haven't filled the gap. So that gap did not fill. This is one of the 30% times that it doesn't fill. But it did eventually fill. That's a really nice trade to get involved in. If you can mark out a recent swing low like this one, this takes it out. And then fill the gap afterwards. It's a pretty safe bet that if it comes out and takes out a low, then goes fill the gap, that you can capture that entire move. That's a really nice one to get involved in. And you can see it went all the way up and took out the previous day's high right there at that candle. So that could be a full pull is what they would call that. That's my favorite setup for opening range gap, is that we go down or up first, take out a recent high or low, and then go. So like in this case, we go down first, we take out a swing low, and then we go and fill the gap. That's my favorite setup because it's the most travel, and it's almost guaranteed that you're going to go up there. There are no guarantees in the markets, especially not on non-farm payroll week. But that's what I capitalized on this one. I went ahead and got in right here at the 9:45 mark and just rode the train to gap closure. I may have gone. I don't think I went all the way up to here. I think I just when it started consolidating, I always get nervous that I'm going to lose everything I just made, so I go ahead and get out. One of these days I'll hold it a little longer, have a big day, but just being real cautious right now because I've made too many mistakes and lost too much money doing that. When I get more, then I'll risk a little more. I hope that helps you understand gap fill rules. Once again, if this is our gap right here, I'm just going to put a box around that and see if this will work. Okay, so there's our gap. And if I change it to regular trading hours, you can see there was a lot of business that took place overnight in that gap area. But the New York session didn't trade in it at all. And that's what the gap fill is all about. Lots of business taking place, nothing in the New York. And that's what they want to do, is they want to go and trade in that area. Price has not been offered in the busiest part of the day. New York session is the busiest part. And it did a typical V, although it wasn't clean, down and back up to the highs. That's what you like to see in price action. And you remember, we don't fiddle in the middle. We only trade the extremes. So when we see a reversal pattern up here, we're aiming for gap fill halfway or relative equal lows, which it didn't make it. You could say this would be our lows right here, or refer back to the previous session, which there wasn't a swing low there either. So that would be the only thing we could use as our relative equal lows, is that straight line right there, which we did take out. And then, of course, you would aim for the highs of the day, which, yeah, that was before the market opened. So the high of the day was actually right here, and this one took it out at the end. If you were getting in a reversal here, you would aim for the high of the day, or at least the halfway point of the range, which would be somewhere around here. And in either case, you would have gotten a nice fill there. That's a 300-point range. 150 points on one micro will pay you $300 with very low risk, $30 to $50 risk. That's a wonderful risk to reward ratio. And it'll keep you in your trading combine. It'll keep you passing, and it'll keep you funded. Low risk, high reward. Hope y'all have a wonderful weekend. Be kind to yourself. Be kind to one another. And I love each and every one of you. Thanks for watching.